Hi guys, and welcome to the Savvy Money Show with me, your host Sean. I apologise for the background noise. We are outside. Now we are going to discuss the earnings. For those of you who were with me back in the summer, you will have remembered I spoke about Snapchat, how the AR tech would catapult them, and you would soon have advertisers flocking to them. I got berated when the previous earnings they didn't, and now you see these earnings that they turned around. I did say last summer how I could see them sometime this year going cash positive, and they have by 1 cent. I can see this as just the beginning. I said how their contracts where people can try on shoes with artificial reality will be a game changer, especially in this climate. Now, this is the thing we need to look for, guys. Something that will set a company apart, not where a company is just following suit. And the same with Tesla. Tesla's going down, and if it breaks 420, we'll see a sell-off. However, the thing with Tesla is you have to realise it's a volatile stock. You may get the bears in charge at some point this week, but remember the run up it's had and look to the future. People don't seem to be looking at, they're looking into opening up a new American site in Tulsa. Well, if you look at the earnings, there was some clues left there how the CFO had to come in and stop Elon, and Elon overrode him, where they're saying they will beat 1 million deliveries by next year. You've got to listen to these little things. This is why you should listen to the earnings yourself rather than listen to other people, idiots like me, speaking of. I don't think they'll have a 1 million mile battery by next year. I think they'll have a 2 million mile battery, and it'll be in the semi. The full self-driving. I don't know why people do not see the potential of the full self-driving, not just for the robo-taxi, but when it gets declared as a medical device for blind people, people with severe sight impairment, or disabled people. And all these gold standard insurance company pay the $10,000 to put in people's Teslas. Anyway, and don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show.
Now, people make the mistake of classifying Tesla as just a car company. And I understand that because Elon classifies it as a car company himself. But it's more than that. Tesla is a moat. And you see here with the ex-Tesla employees bigging it up how great it is. Most ex-employees like to slag off a company because they like to think, oh, the company can do nothing without me. And they're saying how they wish, how they loved working there every day and just sitting there watching the engineers work. Now, you have the cars, of course, which is great, and the fact that they've upped their operating margin to 27.7%, the fact that they've upped their cash flow. Another thing people aren't talking about is that they have, another thing people aren't talking about is that Elon has had, if you remember from summer, I said what they should do is whenever they have a blowout quarter is pay Elon a percentage of his remuneration package that he's owed, so that it doesn't seem like they've had a blowout quarter, but at the same time it just seems like they've grown 2-3%, but at the same time it pays him part of his package that he's owed, and they do that every so many quarters. And what's happened? I didn't expect it to happen so soon. They've paid him part of his stock that he's owed for his remuneration package, and they are still shoring up the cash balance of the company. As well as that, they're increasing the operating margin. They are creating the machine that makes a machine that makes a machine, as they say, so it's not easy to replicate. You know, I'm a Neo bull. I've been in it since $3, but Neo outsources everything. They have a 5-year contract with the state that allows them to produce the cars in-house, and Tesla does everything in-house, and it's more expensive up front, but in the long run it brings more money in. Now, the way you look at it is the bears and shorts are saying, oh, without regulatory credits they wouldn't have made a profit, but because regulatory credits were over 380 million, they only made 331 million after everything. But Elon wouldn't have taken his stock if that was the case. He would have made sure they made the profit before he took his stock. So they still would have made a profit if there was no tax credits. And I understand their point of view, because tax credits aren't going to be there forever. All the car companies are starting their own EV project, and once everyone has their own EV up and running, credits will go away. The other thing is, I said it's a moat, because not only do they have the cars, they're a tech company, they're full self-driving. Now, on Monday, it goes up by $2,000 in the US Why is it going to take another week for Europe? Because it's not going to be available in Europe yet. Now, by the time it comes available in Europe, it's going to double the cost, double the profit margin for the Tesla wise. On top of that, you have the solar business. People are going crazy over solar stocks at the moment, and they're not looking at the solar side of Tesla. They have their HVAC business as well, which are getting off the ground. All their startups. Don't forget they have their mines they're investing in that they've announced this year. And don't forget the new announcement. And I'm not just talking about the new batteries, but Tesla insurance. Now, this is going to be revolutionary in the fact that it's not going to go on age or postcode. The cameras in the car are going to detect how safe you are as a driver, and they will rate you and your insurance premiums on that. What's going to happen as a result of, he reckons it's going to give you, bring in 30 to 40% of what a car company does. Seems a bit high for me, but that will bring in more youngsters, not just to the insurance package, but when the youngsters thinking, should I go Tesla, should I go BMW, should I go Ford, and this is when they make the decision for the car brand for life. They'll go Tesla because it's cheaper insurance, and they won't go Vimo or something Ford with a LiDAR system, purely because it'll have an ugly thing, looks like a Starbucks coffee cup on top. They won't want that. Tesla's cool, sleek, sexy, and it's miles ahead of anyone else.
The next train at platform 2.
Now, don't forget the rumour that he's going to let retail investors in with Starlink, the IPO first of all. And the only way I think he can do that, and it is just a rumour, but he's the type of person who does tend to stand by his word. The only way I can see him doing that is by going on people who Tesla shareholders and how long they've held and how many shares they've had. So, as I said today, if share price hits 420, we could see a sell-off, people taking profit, institutions who don't understand long-term of it. Next year I could see it going in the S&P 500 because they want to, it's such a big weighting that they didn't want it relying on the credits, and while it was on shaky ground. And I also think with everything else, this is something you've either got to get in now or miss out and regret forever, like with Amazon, like with Google. That's all for now, folks. I'll see you in the next show.